Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's office down in Miami. Today's date is Tuesday, June the 11th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. What a day, folks. Interesting day in the markets here. We had the ES open up down over 15 handles to rally all the way back up to previous day's lows, then all the way back down. So the volatility is definitely there in the markets. If you're looking for that volatility that us active intraday traders need, that's pretty good. But at the same time, just all this back and forth volatility at the same time is not good for investor sentiment and just people that are scared of shaky markets and fast moving markets, and it's just not healthy action. If you take a look at the market today, the Dow Jones was down 116.5 points. The Nasdaq was down close to 37 points, and the S&P 500 was down a little over 16.5 points. Now, the highlight of the day here is that we had 4,962 issues declining on the NYSE, Nasdaq, and the AMEX. We had 1,209 issues advancing on the NYSE, Nasdaq, and the AMEX. So therefore, breadth was in favor to the downside for the bears on just about a little over 4-to-1 ratio there. So bears were definitely in control today. And if you take a look at the chart here on the SPY, which we're going to be taking a look at right now, which was down $1.70, down a little over 1%. You can see the SPY closed at 163.09. We opened up from a gap down. We rallied all the way up, filled the gap, and they sold it all the way back down. Now, we had some economic data that came out this morning. I'm not sure exactly how the numbers came out to be, but wholesale trade came out, the red book sales came out, and that doesn't look like it was good because the market sold off. I mean, either way, regardless if it was good or not, the market still sold off today. You can see we're continuing to hold below these key moving averages right here, the short-term moving averages, and we had some trouble holding above this 164 level today. Not only today, but we had trouble holding above 164 yesterday. You can see on Friday we closed above it. On Monday we gapped up and sold off, and today we gapped down and we're back below 164. So 164 is definitely a key level that you want to have on your radar if you are tracking the SPY. If we break below today's lows, which also lines up with Thursday's highs, we can definitely see a nice easy move down back to these lows right here to retest this 50-day exponential and simple moving average around 161.38 on the SPY. If we break back above today's highs, which is 164.59, then we could look at this 165.31 Monday's highs as a target. As far as the ES goes, you guys can see the wild action here. Up day on Monday, big down day today, big ugly reversal bar. We held some a little of my channel analysis right here, pretty interesting. But either way, some buyers came in off the lows, but we could still get another ugly bar here. Remember, we're coming off these highs that we had. We rallied up, put in a lower high here, and now we had a reversal bar today. That's not bullish, guys. So we'll see. The market may be trying to carve out some type of a little high base up here. So just keep that in mind there. Taking a look at the triple Qs, the NASDAQ 100 ETF that is, was down 73 cents today. That key trend line, now I haven't been able to put any market video updates out after the bell market summary video updates out because I've been working on our education that we're going to be rolling out by the end of this week or at least by midweek next week. So if you're interested in that, please be sure to contact me at ccooper at wallstreettrading.com. We already have a couple people signed up. It's a 270 PowerPoint presentation with a whole bunch of charts, analysis, psychology stuff, mental stuff, whatever you want to call it. A lot of good information to prepare you to be able to analyze charts, make smart trades, enter the trade correctly, exit the trade correctly, pick targets, all the good stuff. So be on the lookout for that. We'll be doing some more advertising on that pretty soon. Taking a look at the triple Qs, though, they did get that nice little bounce off that key trend line that we highlighted here that we've been tracking. All right, they got a bounce off that level last week, Thursday. Got another bounce on, got another nice leg up on Friday there. Monday, gapped up, sold off, and today, this is just another ugly candle here. We gapped down, rallied all the way up, this is a nice little range right here, just to close back on the lows. That shows you guys that the bears are in control right now, especially on the Nasdaq. You can see that pretty heavily there, how they're in control. I mean, we had Apple. Apple wasn't down that much today. Apple was down 0.29%, but we had some heavy selling in Google. I would say not. I'm not sure if you want to call it heavy, but they were down over 1%. Microsoft was down close to 2%. So we did have some selling in the tech sector. We had some selling overall in the general markets. I mean, the banks were weak. The financials were weak today. The tech sector was the next weakest sector. Then the basic material sectors were weak. And we did see some strength in some of the healthcare stocks and some of the biotech stocks, thanks to QCore getting that $60 million cash deal for one of their drugs, I believe it was. I have to read more on it, but that was one of the highlight stocks for the day. And even on that stock, they faded the QCore the whole day. But we'll take a look at that stock here when we go into the we start looking at some of these stock charts here. But anyway, the Qs, look for the Qs to see if they want to hold the 72.50 level. If not, look for the 72 level. We break below 72. Look for a retest of this key trend line, or maybe even these lows down here at 71.50. If we break back above today's highs, then you want to look for yesterday's highs, Monday's highs, which happens to be around 73.75. We take a look at the IWM. The IWM, didn't gap down that far from the previous day's close, and was also able to close a little bit positive here, all right, from the opening price. But still, actually, the Russell 2000 looks a little bit contained here because we're trading in this little range. Hold on one second. We're trading in this nice little tight range looks like between 96.50 or so and 99.50. So the Russell 2000 is a little bit more contained. Definitely, if the market was to get another up leg, definitely the index that you want to be trading, or you want to at least take a look at the stocks that are inside that index, as those stocks are probably going to be setting up pretty nice if we were to get a leg up out of here. All right, but we'll see how that plays out. Again, this thing's just in a sideways range right now. Taking a look at some of the commodities here, starting off with gold. The GLD gold is not going anywhere. It's gapping up, gapping down, trading wild. Doesn't seem like it's a sector you want to be in, if you ask me. I think gold probably goes lower. We have some support down here around the 130.40 level, but if you take a look at the chart, it kind of looks like it's an invert. Excuse me. It kind of looks like it's an inverted cup and handle pattern here, so be on the lookout for that. If gold breaks below 130 and we start getting a couple closes below 130, we could be making another move leg to the downside in the GLD down towards 125, possibly even first down towards 120, 129, and then possibly down towards 128 and then 125 or so. But again, we'll see. You never know what's going to happen overseas. That's going to cause some people to want to rush into gold or anything like that. The gold miners, they haven't been able to catch any traction at all as well. Gold miners were down over 3.25% today. Next support level on the gold miners will be down here towards this little double bottom action around 26.32. If you take a look at silver, SLV, for some of you guys that trade the precious metals, I want to take a look at the silver for you guys as well. Silver is already at that double bottom, and if silver breaks below 20.75 or so, and the precious metals are weak tomorrow, this thing can maybe get another leg down. But again, this is not the sector you want to be in. There's definitely more cash flow opportunities in some of the other stocks that are out there that are trading with these nice ranges. So SLV, no action there. Now, if you take a look at crude oil, which I'm going to take a look at the crude oil futures instead of the USO, because that's how I like to look at crude oil. Crude oil is still holding over above that key 92 level that we were, tracking, because every time we went down to 92, we saw those dip buyers come in right here at both times. So if 92 could continue to hold, it's a nice solid base in crude oil, and we put another high little pivot base over here, but then maybe we could get a little breakout above crude, above 97. So we'll be on the lookout for that. We'll keep you guys posted with that as well. The VIX, we actually called the VIX out. Well, I actually called the VIX out for a trade near the end of the day there. The VIX is showing us something pretty interesting here. If you guys see this nice little yellow band of action that I have here from back in October, all right, we were not able to break and hold above that band. Break and hold it, we couldn't do it. This is, I would say, 1. This is 2. Let me just clear this out real quick. This is 1 attempt to try to break out the zone. This is 2. This is 3. This is 4. This was 5. We're going back up. If it's a 6th time, if we get this action going higher here, and you see at the bottom of the chart, this is actually a possible pivot closing price, new higher low right there. We may be getting ready to take off here on the VIX. So you definitely want to be on your P's and Q's with this market, guys, because we got some interesting things shaking up here. If I'm not mistaken, my friend told me that the Nikkei was down a lot today. So I'm going to take a look at the Nikkei futures real quick. I normally don't do that, but I just want to take a look at it. And yeah, the Nikkei, the Nikkei was down 715 points today. Okay. Um, so let's see here. What else we got going on? Take a look at the commodities. Took a look at all the other stuff. Took a look at the VIX. I'm not going to take a look at the currency action today because we know the dollar's been weak and the euro's been kind of strong. So let's go ahead and talk about some of these stocks here. Apple held up pretty decent today. Not bad at all. Apple was down $1.29. Another stock that you do not want to be involved in had this nice little rising bear wedge right there, and looks like it's going to break down. So not a stock you want to be in. Even if it doesn't break down, it just chops around. Look at the action on it. Up, down, up, down. Not a stock you should be trading right now. If you take a look at Amazon, Amazon has some better cash flow opportunities. As you guys recall, about a week and a half ago, or I should say last week, Monday, or it was, the last time that I did the video that I wrote on the blog, I believe it was last week, Wednesday. I talked about Amazon being a stock that you want to have on your radar to watch for a breakout, for the fact that it was setting up in our nice little channel analysis, had the breakout, had the back test, held the 50% line of the channel, rallied up, consolidated a bit in the top of the channel, then boom, had a nice little breakout on Friday, nice little follow through yesterday, and then today it gapped down. This is still going to be a stock you want to take a look at, but if the market gets some more downside action, you want to see if you could possibly pick it up back down towards this 270 area, maybe and see if it does like a little flash through through 270, and maybe whatever day that it does a little flash through the 270 level, maybe puts in a hammer off the top of that channel, and then tries to trade back up the same way that ExxonMobil did when the ExxonMobil had the breakout of that little key trend line, how it rallied up, back tested, held right there, gave a nice little bounce, or even right here when it came back to the trend line, back tested, then gave a bounce up. So we'll be looking for that same scenario in Amazon. Let's go ahead and take a look at the banks real quick, because the banks were weak today. Something you definitely got to take notice of. They're still holding up pretty well, but they were one of the weaker sectors today. Goldman Sachs is still holding above this key 158 level that you should be watching if you're watching Goldman. That 158, pretty much a little trap action, nice little bull trap action above 166 on this little breakout above this resistance. Trapped a whole bunch of longs yesterday that were holding overnight. They dumped their shares this morning, looks like. J.P. Morgan. This one had a nice little rally off the lows, but then they sort of back off the highs. This one's still hanging on to its 20-day moving average. And then Morgan Stanley was weak today. Morgan Stanley was probably one of the weaker banks today, down close to 4%. Still hanging on to the 8 and 5 EMA, this little area right here. But if we break below today's lows, next target I would assume will be back down towards the 20-day moving average, down towards 25.22. QCore was one of the stocks that were in play today. QCore had a nice little gap up and then sold off the whole morning. We actually call this out in our pre-market, in our trading room pre-market. Take a look at the 5-minute chart real quick. After pre-market, it broke over this 44 level. That was where a lot of the buyers came in, so we told our traders, don't try to buy it up here. Of course, it's already up like $7. Wait for it to sell off, so it sold off a nice little sharp $7 into the open, right into a nice hardcore level where big buyers came in. Big buyers you see right there, right, guys? So we got people long in our chat room at 44, and we told them they could sell it towards that 46. I actually got rid of mines at 45.15, booking $1 or so, and it was some good action. So you definitely want to make sure that you're that you come check out the chat room, or that if you're interested in learning how to trade or trade with our prop firm, you contact me at ccooper at wallstreettrading.com. I like to say that I'm one of the good guys out there. There's a lot of other firms out there that they don't take care of their clients and their customers and their traders and stuff like that. We try to give you guys all the tools that you need to be successful. So in any case, have a great day, guys, and I'll catch you guys bright and early tomorrow morning. Cheers.